There is Malaysia's central bank, or as known Bank Negara Malaysia. This bank is quietly shaping your life in ways you may never have imagined. From policies that should lie influence food prices and the affordability of your groceries, to releasing billions into bank liquidity system to boost your job opportunities. BNM's impact touch every part of your daily life. This is the untold story of Malaysia's most misunderstood economic engine. Imagine a control room with four powerful levers. Each one lets Bank Negara guide the economy with precision. Interest rates to control borrowing and spending. As of May 2025, Bank Negara maintains the overnight policy rate at 3%, supporting stable growth by encouraging borrowing for businesses and consumers alike. Foreign exchange interventionists to steady the ringgit. BNM stated in June 2025 it will intervene whenever ringgit volatility becomes excessive, using reserves totaling over 117.5 billion to smooth fluctuations and protect purchasing power. Reserve requirements. To manage liquidity in May 2025, BNM reduced the statutory reserve requirements from 2% to 1%, freeing 90 billion, helping banks lend more to businesses and householders. Macroprudential rules to cool overheated sectors like housing. Bank Negara continues applying loan-to-value caps and stress tests. For example, home loans now typically require borrowers to have a strong financial profiles, safeguarding against excessive borrowing and housing bubbles. And one of Bank Negara's most visible tools, the Malaysian ringgit, a stable currency protects your buying power. You used to buy 9 ringgit for chicken, now it is 12. Third difference is inflation, but not all inflation is bad. A modest, predictable increase encouraging spending instead of hoarding cash. Inflation can be driven by demand pull when more demand than supply. Cost push, rising costs like oil or import in manufacturers. Policy driven like new taxes or tariffs increase cost. In Malaysia, inflation often related to fuel prices, food imports, and the global currency shift. Factors BNM closely monitors. Bank Negara targets inflation between 2% to 3.5%. In 2024, inflation averaged just 1.8%, reflecting effective management. But what really matters isn't just price rising, it is whether your income rises too. When inflation stays low, Bank Negara can safely lower interest rates. Lower rates help businesses borrow cheaply, invest more, and to create higher buying.
The minimum wage from 1,500 ringgit to 1,700 ringgit was a move celebrated by many. The additional 200 ringgit could go a long way for over 600,000 Malaysians who now earn 1,500 ringgit or less.
Growth is strongest in tech, construction, and clean engineering, align perfectly with the Malaysia New Industry Master Plan 2030. The plan outlined four priorities: industrial reliance, clean energy, digital transformation, inclusive development. Take Noreen, a 24-year-old graduated from a digital skill bootcamp who landed a job at solar energy startup. Across the nation, similar stories unfold. In Sarawak, green hydrogen plants Johor solar farms, digital banking, cloud data centers. And for Malaysians who risk being left behind, deliver millions of opportunity through micro credentials and skill training, benefiting from supporting monetary condition. In 2024, inflation rocked much of the global. In UK, over 5.5%, USA around 3.4%. In Malaysia, inflation was just 1.8%. Malaysia isn't just managing inflation, it is building something bigger, because when the prices rise slowly and wages rise faster, when skills training expanded and business grow, then inflation isn't the enemy, it is just the backdrop of a nation moving forward. Malaysia is balancing growth with stability, vision with occasion, and people with a policy. That's what really progress looks like.